Trader Theo here. This is the episode 8 of the chart setups of the week, where I walk you through high probability trade ideas and market breakdowns. Let's start with the Euro US dollar this week. What we expect to happen? Look, the price really created a long bearish candle around the weekly time frame. Still bounced off the 10 weekly period moving average, but it has bullish implications because of the overall market structure. Now, if we move to lower time frames like the 4-hour chart, we see the price created this lower low and lower high formation, and right now is coming off this bullish engulfing candlestick because the market left behind all these fair value areas, that one there and this one here. We do expect that at some point, at least the first one will be filled, and if we're going to see the rejection, or if the price is going to make it all the way to fill up this area and then it's going to drop. But obviously, if the sellers will come out aggressive from these areas, we might going to see also an aggressive move to the downside, despite the current bullish implication for the next hours out of this candlestick. Next one, it's interesting to check the Australian dollar against the US dollar. The weekly time frame here created not a bearish engulfing, but pretty close to a bearish engulfing candlestick, with the real body closing below the 10 weekly period moving average. The reality is that the market is kind of moving sideways. If we check the daily chart, we see that the market doesn't have any meaningful here, any market structure. If we isolate the last impulsive leg, it's more on the bearish side rather than on the bullish. But if we see a lower low, then definitely we are looking for short positions. Day trading, of course, the boundaries will be between the S1 weekly low and the S2 weekly low. These are going to be strong areas of support. Next on the list, the sterling. On the weekly chart, the sterling shows how weak it's against all the other currency pairs. The market made lower lows and lower highs, more bearish than bullish. 4-hour time frame, this one, it's very, very bearish. The price currently reject this inside resistance, and we do expect further downward continuation based on this one. If something changes and the price makes a high higher than this high, we do expect to see further move to the upside. But based on this one here, it's more bearish than bullish. Maybe something changes during the middle of the week, but again, as I said, for now, based on what we see, this is more bearish. If you are looking for something strong to trade this week, I will go with the USD against the Japanese yen because of this market structure of the weekly chart. Let's analyze, let's break it down first. The weekly, it's clearly in a downtrend with lower lows and lower highs. Last week, the price rejected 2 weekly highs, and it closed bearish, which shows strong selling pressure, reversal price action, and the most significant part of this reversal price action, it's not the price action itself, it's just it didn't follow through a previous week's reversal price action. Based on that, we expect the price to decline. First target can be the previous week's low, second target can be this weekly low. You can copy and paste the numbers. On the weekly time frame, of course, the 4-hour turn, the market came from this higher high and higher low. It broke structure. We see a lower low. Based on this fair value price, we do expect some kind of deep retracement before any further downward move. In this point, I would like to show you how you can use a Fibonacci if you don't know. So 61.8, 50% to 61.8 are the areas, but before we draw the Fibonacci exactly, we must identify the confirmed swing low. Gold came strong last week and it reversed the bearish implication of the candle with a long upper tail, and it created a bullish hammer, long lower tail, fairly nice size and bullish close. On the 4-hour time frame, the price turned. The cycle looks like it's gonna end up as a bullish one now. After we see this higher high here, we can explain this as the failure swing low, something that I teach during my trading courses. This fair value area here, it's expected to be filled. We don't know if the price will make a new high and then it's going to dip down into this one, or if it's going to just reject the previous week's high, come down and then continue. But despite that, we turned now the 4-hour chart. It's bullish, it has bullish implications. The hourly time frame, of course, it shows so much strength, and that came after the non-farm payroll last Friday, so it's more bullish than bearish. The surprise of the week was nothing else rather than the Kuber. The price experienced maybe the biggest decline ever, the biggest move in terms of pips within a week. We see the price left this long bearish candle. There is a lot of room to be filled up before continuation. Look at this, it's a massive drop. So if the price comes somewhere in the middle, we don't know if it's going to come up this week or the next week or when, but it has much more bearish implications rather than bullish implications. Now, based on what printed down here, it's fairly impossible to have 100% clarity the direction we want to trade next week, because the price moved sideways since Thursday, and maybe the market anticipates some retracement, deep retracement, shallow retracement, whatever is going to be the case. First target will be the high up here if you are trading long on the lower time frames, but if you see rejection here, maybe we continue trading lower. German 40 weekly chart closed super bearish. Areas of support, first one, previous week's low here. Then we have these areas of support, the weekly slowdown there. For our chart, the price broke below this consolidation that formed right there, and based on this pattern, the market has about to decline up to here. Now, what we see happening with this one is that the sellers are in control, so we're going to find ways to go short depending on the time frame you are using. You trade the hourly time frame or the 5-minute charts, then definitely you don't. If you trade the 5-minute charts, you don't follow the 4-hour overall direction, but you follow most likely the 4 hours price action. Then the overall direction, you get it from the hourly time frame. As you see, hourly also it's down until the London trading session. We have another 10 hours from this moment, and we'll see what's going to happen. But based on this one, now it's turned to more bearish rather than bullish. Nasdaq, the market closed with a bearish engulfing weekly candlestick. This is super bearish, and of course, because of that, the market ended this long-term uptrend. Now, it did it with a strong move from Thursday onwards, and it leaves us with the picture, with a pattern that the sellers are absolutely in control in this market. Let's see where the price is going to find some resistance to reject, or if it's going to bounce from this support. Day trading requires well understanding of the hourly supports and resistance, and then on the 5 minutes or 1 minute, depending which time frame you use for execution, on the 5-minute chart, let's say, good understanding of market structure. Bitcoin, last week we said that based on this candlestick we might want to see further bullishness, but the reality is that the market is already in an uptrend and it craves some retracement before it continues. We cannot take away the fact that the price created bearish divergences with pretty much all the cryptocurrencies. The price made higher high, and the MACD showed the opposite. So this has more bearish than bullish implications. The lower time frame you go, the more downtrends you're gonna see in this one. So this week, definitely we expect further weakness if the sellers will keep controlling this market. Ethereum, another bearish engulfing, follow this hanging man. Look at this price action followed all these long bearish candlesticks, small real body and long lower wick with barely high being visible above the closing price. Bearish engulfing last week, it just created a turbulence, let's say, in Ethereum. The lower the time frame, now the clearer the downtrend. So this has more bearish than bullish implications. And because I know now everyone is focusing on the XRP, let's just explain it very quickly. The price makes higher highs. Of course, MACD disagrees on that. There are a lot of fair value prices to be filled before a further continuation. What do I see here? The $2.40 will be the first area of support. If the price breaks below this one here, then I will definitely make another video. If this is going to happen during the week, I will make another video, because then we are going for a crash here. Okay, so it's going to be very interesting, especially with this one. These were your setups of the week. Ensure first you manage your risk on the trade, second trust your edge, and third trade with confidence. I'll see you next time.